Okay, so what is market structure? A straightforward answer would be a structure showing the direction of the market. Where is the market going? Is it an uptrend or a downtrend? Now, the definition is very simple, but identifying it is another issue for most traders. The moment you open your chart, you have to know where the market is. And if you don't know how to do that, well, this video is for you. This is Dion Trades, and today I'll be teaching you market structure mapping. Okay, here is a quick and simple drawing of how the market moves. Can you identify the highs and lows, the break of structure or change of character? And most importantly, what's the market direction? You can pause the video, don't just skim through. You can take all the time you need. Alright, so what do you need to mark your structure? You only need three things, alright? You only need inducement, break of structure, and the change of character. Now, inducement is basically a level in the market where traders are trapped in losing trades. These are levels where traders are induced to enter trades, alright? You know that area where you enter a trade, it hits your stop loss, then moves in the same direction you anticipated in the first place. That's your inducement. I can't go into much details about inducement. There's a video in your top right corner you can watch. It covers everything you have to know. For the break of structure shows continuation of the market in the same direction. And for the change of character, as the name suggests, it clearly says it shows a change in the market direction. All right. So boss, it's a continuation. For a choke, it's a change in the market direction. All right. And that's how you should mark your structure. I know. It first looks like an introduction to calculus. But don't get discouraged. This will be very straightforward when we look at a real chart. So for break of structure, as stated, it is a new market structure that emerges after taking out inducement. All right. Now, it's crucial to note that if no inducement has been taken out and a new structure forms, it doesn't qualify to be a valid break of structure. All right. And for a change of character, it represents a significant shift in market structure. Okay. It signifies a complete change in the market's direction. So, inducement acts like a catalyst in the market. The moment it's taken out, the market tends to take an aggressive move to create a break of structure. All right, now let's look at this red shaded area here. Why is there no break of structure? Because it looks like the market broke structure, but why is it not a valid break of structure? It's because there is no inducement taken out in that area. All right. And if no inducement was taken out, there is no break of structure. It's that simple. Look at the first break of structure, for example. Inducement was taken out before the market continued going in its direction. And like I said, if you don't understand inducement, there's a video for you that you can check out. Now, look at the next break of structure. Do you see the inducement that was taken out before forming a break of structure? This right here is your valid inducement. And the moment it was taken out, the aggressive move upwards formed a valid break of structure. And just another important tip for you. When a move that forms a break of structure does not leave a valid pullback behind, your last low in an uptrend become inducement. Okay? Before any break of structure is formed, inducement must be taken out. Okay, so this is how my chart looks like every day. If I miss a trade, it's very easy to wait for a new setup. I don't enter a trade because I'm supposed to enter a trade. No. I enter a trade because there's a trade setup. Okay? So this is a screenshot of a live market. Today is what? Today is 12 October 2023. You can check it out if you want. These setups form every day depending on the time frame you are using. So guys, I'm telling you, if you master market structure mapping, you'll never look at your charts the same way ever again. All right, now let's see how the market structure mapping was done here. Look at the first inducement. It was taken out and the market formed a break of structure, but I did not mark that break of structure because I was not there. I must have been sleeping or something, I don't know. And that's just the thing, okay? You will not always catch every trade. Sometimes you won't be around, but the good part is when you're active, there's always a setup waiting for you. And that's what gives you discipline and patience, okay? Now, you see, on the next inducement, I was active. So I took the trade. It was a short trade, but the risk to reward ratio was enough to call it a day. So knowing what to look for in a market before taking a trade is what's going to give you an edge over an average trader. The moment your change of character is formed, you change your focus. What I mean is, like in this case, the market was bullish and so I was only looking for buys. The moment there was a change of character, the focus switched to sell setups. As you can see, I marked the first inducement, just waiting for the market to take it out before getting a sell setup. Sell setup formed, I took the trade and boom, there was an aggressive move to the downside. Do you know why this move always moves this quick? It moves this quick because it wants to form a break of structure. After that newly formed break of structure, what do? I look for inducement again. I mark the inducement, and once the inducement is taken out, all I'm left with is a sell setup to wait for. A sell setup forms, trade taken, and boom, the aggressive move to the downside, looking to form a what? A break of structure. And the cycle continues. So guys, please stop making unnecessary losses with unnecessary trades. You can do better. That mental stress, it's not worth it. Have you noticed how aggressive it moves when going to break structure? Do you think that's random or a coincidence? Ask yourself, you should ask yourself that. They teach you to mark a new high when the last high is broken and a new low when the last low is broken. And then when the market breaks both the high and the low in one move, they tell you to just accept the loss because it's part of trading. Of course, you can take losses here and there, but not losses that are avoidable. Come on, guys. The moment the market gets into that structure where you are not expecting, analysis paralysis kicks in immediately. Then you start entering impulse trades, and that's how you go into that losing streak. That's not normal. Stop treating it as such. All right, guys, I can talk for hours, but no, I won't. So if you have any burning questions, you can put them in the comment section, or better still, you can still join my 1 month mentorship program to get personal interactions. There's also a full course. It's in PDF where everything is explained in full detail, from pullbacks all the way to entries. All right, so this has been Dion Trades, wishing you a happy trading.